Okay, hello everyone. So today we're going to be doing a interesting version of the Sunday Trader Talk where I was thinking what would be another part of my week that I'd be able to show you without the full use of being able to type out a whole lecture presentation using my hand. Luckily, I'm going into my final period of recovery, so my hand is doing a lot better, but still unable to type really comfortably, barely able to write with a pen still, but getting there slowly but surely. The focus that I wanted to put into this talk was to mainly understand better how I go into the week as a trader from a very practical standpoint. So really focusing on the exact things that I'm going through every single time I open the trading platforms, and I want to have a look at what is happening in the market every single time a new week opens. It's always been important to me that if I can get a jump on the market, the very first hour to 2 hours, even 3 hours that the market is open, I'd have that tactical advantage over the rest of the week, being able to say to myself, okay, this is exactly where these markets opened. If there's something that I want to do, I'd be able to implement that into place. And if there was something that I noticed might need to be done because of the open, I could prepare myself going into that week. So in this talk, those are the kinds of things that I want to try and focus on. But I'm really going to be spending more time also having a look at different setups on the market, different positions that certain pairs will have opened in. And obviously the market is moving right now. So I did wait for midnight in order to actually film this video live and actually have it as a real live scenario. But this is effectively the practice that I make use of when trading all market opens, mainly because of the fact that my portfolios are always running and always have positions open. I'm usually always watching the market opens, and especially because right now we have lots of work in the Japanese yen, and lots of positions on Japanese yen and Aussie dollar and New Zealand dollar currencies. Those economies do open around about this time of the day. So you're also dealing with those things taking place around the world. And then you're obviously dealing with the rest of the world waking up very soon. And then you'll have Europe waking up in about 7 to 8 hours time as well. So those are some of the things that I like to try and focus on is if I'm trading asset classes that might be affected by a specific time zone, that I'm at least awake and available around about that time in case something very important happens and I need to try and take advantage of it. So to start off with for the week, my main focus points are to initially have a look at my own positions, so where my active positions have opened in the market. That's a very simple process. So by basically going onto my trade terminal and then having a look at what positions I've opened, I can then drag and drop them onto this template. Now, based on one of the previous Sunday Trader Talks we hosted where I explained in full exactly how to set up your profiles, that is effectively the one profile I have available is the active trades profile, which is going to give me access to all of the active positions I have right now. There is one position here I don't have in Brent crude. That's because I missed the order, but I'll explain that as well. So I've got all the positions available here that I need to have a look at, that I need to assess, and that is what I really focus on for the first hour to 2 hours coming into the market. So main focus is obviously having a look at sometimes the hourly opens. Something that's a big importance is also having a look at gaps. So if the market's opening up on a gap movement, I want to at least have a look at the hourly chart to understand, okay, which was the hour that the market opened, and then was there a market gap open, or was there some kind of difference between the close of the previous candle and the open of the new candle. If there is, that can sometimes create some kind of discrepancy in the data to some traders, but most of the time what happens is you have a gap fill that can occur. So for example, if you have a look back here, this I can probably say is, okay, yes, so this is the difference between a gap that occurred between 2 days of trading, where you can see how the market closed the previous day much higher, so on a bullish candle, but then there was a massive gap open between the previous day's candle and the new day's candle, and then you can see there was a push up and then a close. And this naturally does occur. A market will tend to naturally fill the gap that it has created, and that's what you can see when it pushed all the way back down and came right below this level. So the market filled that gap very, very quickly, which usually does occur. Now, if you're in a market where, let's say, for example, the market gap's wide open, and let's say, for example, it gapped further down against you, and you think, oh, this is an opportunity for the market to fill, then you can open a position much further down and wait for it to cover on that position coming back. Now, that does not always occur, but for example, when trading Japanese yen pairs, you do have that occur. Japanese yen pairs are well known to have times where they do get a gap open from time to time, and you can take advantage of them. Not as easy as many people would think, but it is possible to take advantage of this. Now, the next one is mainly focusing on, so once I have a look through all of the different pairs to have a look at where the gap may have occurred. So for example, just to quickly double check, I would say no gap on this currency pair. We've opened up almost the same level. This currency pair, we're not dealing with any issues. Same with this, we're basically on the same position as we had last week. So all of these markets have opened more or less on the same level that we expected. So basically open from the previous closes. That makes life considerably easier for us when trying to focus on the next step of our trade. And that is then focusing on the weekly time frame and focusing more carefully on where these weekly time frames were opening. So obviously the previous week of information gives us a lot into the progress of that week and what we expected versus what did occur. Now, if you remember the previous trader talk, which I thought was nice to take a little bit of time off to really just focus on the chart itself, but I'd mentioned in the previous video a few of the different things regarding the progress of some of these trades, and I was talking about some of the candlesticks that were forming and how we saw a lot of positivity in these candlesticks, and I was narrating a kind of a projection of what I was going to expect for the week going forward and what I would think would be a lot of good progress. And to some extent we saw that, to other extents we didn't. And now the thing is that it gives me the opportunity to show you the second aspect to what we like to focus on for that open on the week, and that is having a look at the candlesticks on the weekly time frame. So to have a look at step 2, you would need to focus mostly on the weekly time frame, and that's just basically where I'll take these open positions. I'll just all jump them onto the weekly just to make sure they're on them, and then I'm basically going to run back and have a look at what the previous week looked like and what I think could happen going forward. So for this, I do recall talking about the Bollinger Bands for one. So for the Bollinger Bands, I was discussing how there would possibly be a good opportunity to exit this position once it tests the Bollinger Band level. I'd also mentioned that previously I remember, I think it was the Euro CHF. Let me just quickly double check this one. Yes, I think it was the Euro CHF I was discussing. So my ultimate goal when it comes to the New Zealand dollar CHF, so the previous time we spoke about this, we were talking about this bullish engulfing candle that just looked really, really good. Now we had a spinning top candle, which is showing a little bit of an interesting setup. If we go and have a look at the daily time frame, that's where you can really see the culprit. Is the daily did become overbought, and you can see how the market is gassed to that level. There has been resistance towards the Bollinger Band, and now the market wants to pull back to that lower level. Now this does happen, and if you go and have a look at prior, when this channel was last trending, you did have that same thing occur. The market pushed higher, tested that level, and then wanted to pull back. But once the market did pull back slightly, you had that recovery and the push back up to the upside. So that is a higher probability scenario, as you can see a prior experience, how the market pushed up to this level, broke back down, but then continued to ride that trend back to the upside. So there was a continuous momentum regardless of the setback. It was that market regathering its energy. And that is my theory for what I suspect is happening right now. Is the market has gained a lot of momentum, a lot of upside momentum, which is good for us. However, you can see that that market did pull back slightly. So last week prior, we had 2 days worth of the market having a really strong pullback, erasing the gains of the week, and actually having that market closed the gap. So last week did gap open, pushed a lot higher, and then closed the gap on the very last day. So that just kind of shows you a testament to what step one was talking about, is where did the gap open? And, if that's not a problem, then step two is having a look at the previous week's progress versus this week of progress. So, back onto the weekly time frame, if we know that the market is probably going into some form of a zone trending, then possibly we don't have to be as worried about it. But obviously the fact that we received a bearish candle is a little bit of a risk. So that has been something that I've been watching closely. I didn't expect us to have a bearish candle after such a strong push. It did confuse me somewhat, but once again, I'm expecting that we can have that strong push, that market begin to trend and move into the direction that we know the market's indicators are beginning to show us more and more time and time again, is that these markets are very oversold and are looking for that opportunity to pivot. It's just about time that enough buyers step in on the right direction to influence the movement of that market. And sometimes we do have to wait very long for that result to occur. Going into these positions, I have very little risk right now because of the fact that we've already made progress into those profit zones. Partial positions have been covered in a good profit, with some of them in a loss, but we've at least been able to cover our downside, which has de-stressed us and released our emotional investment that we take in the position. And for myself as a portfolio manager, that is definitely an important aspect to, if every single week you're dealing with a position where perhaps it's not progressing the way you wanted, the easiest way to stay emotionally, truly emotionally resilient is to try and not keep yourself invested in the outcome of that position. Be very clinical and just very straightforward about, your interpretation of the situation. So for myself, when I look at these trades, going into the week, I'm trying my absolute best to keep a positive mindset, but at the same time be very honest with the findings. The findings of these positions is that we could possibly be going into that trending of the movement, but I would definitely need to make sure that if I suspect this week going forward is anything like the previous week, I can't really make that analysis anymore, because the week prior was a very big bullish candle, now followed by the previous week candle, which was a spinning top candle, a bearish candle at that. And then now we have the new week's open. So I don't entirely know where we could be going, but what I am going to be watching very closely is on the daily chart to see if that market is actually trending and could possibly bounce off of this Bollinger Band level and continue moving upward. I would really appreciate to see that outcome occur, as we have seen happen prior. Now, I'm going to be watching the daily more closely, and that is definitely going to be showing you what step 3 looks like. And I'm basically using different charts and different scenarios to try and show you an example of what steps I make use of. So step 3 is definitely sort of the plan and execute step. So once I have a look at all of the trades that I have open, I will write down an execution plan. Now it's actually been kind of annoying because I couldn't really write down an execution plan this week, just because of not being able to write, but I still did my absolute best to sort of, take down information on a spreadsheet and try and build it. I really enjoy being able to write, my plan of approach and try and better understand, what am I going to execute for that week going forward. So I wanted to sort of, try and influence upon you how important step 3 really is. So step 3 is really focusing on your plan and execution. And if you don't have a plan going forward in the week, how are you going to be able to understand and influence the outcome of that week? So my ultimate goal when it comes to getting ready for the week going forward is making sure I have some form of approach written down that has logic behind it. So I'm going to, for one, want to have a look at all of the trades that I have open to better understand what I should do with those trades for the week going forward. Is there a hold? Do I have to wait and not do anything? Is there something I maybe need to do? Is there action I need to take? Is it positive? Is it negative? How urgent is it? When does it have to be done? These are the kind of questions I need to ask myself as a portfolio manager, so that Monday, Tuesday, Wednesday, Thursday, Friday, if I know on Wednesday the Reserve Bank of New Zealand has got a very important announcement coming out and I really need to be watching that, that needs to go into my schedule. And I need to go and watch that announcement coming out if I think it's going to influence the health of my portfolio in a positive or negative way. So if I'm not preparing to that degree, then I can't really be disheartened or angry or victimized if I lose money to the market, because I'm setting myself up for failure. So although that is a more advanced technique, the focus of this technique is to try and better understand if I need to execute a position on a trade idea, I need to understand those different variables. Now, obviously, when I'm preparing for the week going forward, I can understand more or less what I'm going to do. Now, the goal is to understand that the perfect position you take is the one that accounts all the different variables. So you know that you've taken it more or less the best time in the week. You know that you've taken the right position size available. You've executed on the right idea. You've exhausted all other lower risk options. So if there was an easier way to manage the position and you didn't take that route, then yes, that is the option you need to make use of. But if you just jump for the opportunity to open up a trade whenever you want throughout the week without taking into consideration any factors in the market, then you're going to land up risking your capital in the market with a stupid move. And it's a very critical aspect to being a successful trader is, when do you pull the trigger, when do you execute? And that is why step 3 is where you really have to document your thoughts and you have to document your intentions for that week going forward, which is why it's been so annoying to not being able to write down my intent and sort of have to visualize it in my head. But my goal is then to go through each and every one of these positions and clearly justify if I need to take another position on any of these ideas. Now, if I do find a trade where I say to myself, maybe I should add another position to this, then I'm going to go through a process of justifying why I need to add to that trade. So one of the previous trades I added to last week, which we can have a look over here, is the pound Japanese yen. So you can have a look on the pound Japanese yen. I added to this position down at this buy order of 2.99. I was happy with the execution of that order, given that we were relatively close to the bottom of the week. We weren't right to the bottom of the close of that week, but I got close enough on the trade. I was having a look at the hourly time frame, but my focus was to really see if we could exit out of this position with quite a good profit. And I only got into this position around about over here, so I didn't even see any of this progress. But basically what I took that as, when it comes to somewhat of a signal, I just sort of thought to myself, well, this position is definitely forming some kind of recovery. There's obviously a market momentum to this, with the multiple spinning top candles forming a bit of a sleeper move. And if you have a look here, setting up a little bit of a formation. So this would have obviously been my opportunity to get in, but I also knew that a great way to get into this position was just to wait for the 4 hourly to become oversold. And that's ultimately what I did, is I just waited and waited. And I knew that the market was going to fall from this level come beginning of this week. I knew that we were supporting a very, very high point on this market, that expanding far above those Bollinger Bands was not going to be something that the market could uphold for a long period of time. You have a look prior to this, we've never really exceeded miles beyond those Bollinger Bands at the bottom of these trends. So that's really what we need to focus on, is understanding that we don't yet have the momentum to go through an entire pivot quite yet. And although that might be somewhat of a micromanagement to the bottom of the pivot, if I know I wanted to add a position to this trade 2 weeks ago when I previously spoke to you about this, so it's 8 days ago, I knew that I wanted to find the best possible entry point, and the best possible entry point was on the smaller time frame. But if I was not watching that, I would have opened the position, additional positions, at the wrong entry point in the market. Whereas now I have gotten as close to the bottom of the week's progress as I possibly could have. So at least I can understand that, okay, on this position, I took the best possible entry of the week. I waited for it to occur. I let the market digest the overbought week it had prior, the very progressive week it had. It needed to exhaust some of that energy, so I knew there'd be a pullback. I waited for it, and then there was the recovery. So that is a perfect example of a plan of execution that worked perfectly. it just worked absolutely smoothly. But if I didn't plan that execution of those trades, it wouldn't have worked out as easily. Now, when it comes to these trade ideas, that's what I quickly want to focus on. So I'm going to put step 3 in play and show you a few quick examples of whether I can say yes or no on a trade on decision making wise. But I'm going to run through these active positions and then get through to the next step for you. So to start out with, on Aussie dollar Japanese yen, so not to go through all 3 steps, just to focus on step 3. Based on execution, I'm not really too worried about this position. I've got my lowest order in. I'm now currently have the market sitting inside the majority of my positions, and really what I'm looking for is a minimal move, either up to this higher position over here. So I'm looking for hopefully a move up to this point, or best case scenario, a move up to that point. Now, when I have a look at the weekly time frame, we've got a very good cross of these time frames, and we've got a nice push back up to that level. If I make use of the Bollinger Band and just close out at the average of the Bollinger Band, I should have the market closing out around about this level where majority of my orders are sitting. So I'm going to be closing out in a majority profit. Even though the position didn't initially work out, there is a high probability that I'm going to be closing out in a relatively okay profit on this position. So happy with it, not going to add, can move on to the next trade. Pound Japanese yen, I obviously have just explained that I got the lowest, one of the lowest points of the week to add to the position. I have enough in this position, I feel, and I really need to see a progress over the next couple of days before I decide what do I want to do with it next. Because the thing is that I need to see some progress on this trade. So that is really where I'm sitting on that position. Weekly wise, the stochastic on the 25 has now moved into the oversold region on that. The 15 period stochastic is close to crossing, and then on the monthly time frame, we still have the market quite oversold. So even though there's a high probability of success on the pound Japanese yen, I don't want it to run away with me. I want to try and keep all of my orders as close as possible and hope that the position does pivot in my favor. Now, obviously, hope is false for a trader, but the point I'm trying to make is that I don't want to be sloppy with where I put my orders on the pound Japanese yen. So I'm going to wait on those for now. Going into the New Zealand dollar Japanese yen, at the moment, it's literally sitting within where my orders currently are. So if I sort of zoom in a little bit, you can see how the position right now is currently within where both of my trades are. So I have 3 positions. Well, depending on the portfolio we look at, I've got multiple different positions open across all of these trades. But this, for now, I'm just going to leave these open and let them play out. I do suspect that over the next couple of days, to maybe 2-3 weeks, we will have these positions play out back to where the take profit levels are. I'm not concerning myself very much with the behavior of the market right now, because I do feel we're in somewhat of a progressive state to the Japanese yen pairs as of now. You know, in terms of what I've just shown you across Aussie dollar Japanese yen, you know, there is a good probability that we're going to recover at least to the minimal points on the charts that we currently have in the Bollinger Bands, you know, at least recover to the average point. In terms of the trends that we've been picking up on the monthly time frames, we've been seeing the oversold nature of these charts. We've been seeing that the market has been incredibly suppressed by strong selling pressure to all of these currency pairs, and now those currency pairs, the orders on those are beginning to invert, and now more people are buying up these contracts than selling them. So over time, you know, the momentum will grow, the commitment of traders will grow, and we will have enough, you know, buy orders and momentum in the right direction to cover the profit of these positions. So these 3 positions, I'm leaving for now. Everything on the Japanese yen, good to go. I'm, obviously not super sprightly about, the last week of trading, watching that the week was still in a bearish week. That was a bit difficult to watch after a really good week of progress. But once again, we do deal with pullbacks. I want this week going forward to be nice and positive. If it isn't, I'm going to have to be a lot more tactical with my decision making for the week after going forward. Going into the next trades, the Euro CHF, New Zealand dollar CHF, for now, I'm not super concerned about it. I have been thinking about the Euro CHF to add to the position, but that is a difficult thing for me to decide on right now. But what I will be able to make use of step 3 on is my decision-making process to add to this position. So in terms of the work that I've been able to do on the CHF research, as well as currently what's happening with the pound, the euro, and there is tons of really awesome news coming out right now. I'll try and throw up a few different pieces of news that you can all make use of. Great pieces of news. What I've been noticing with the central banks right now is the modern day monetary policy, which a lot of new economic lecturers are talking about more and more, is that their economy cannot deal with the very basic and understandable process of interest rate policy, and of monetary policy. Now the Federal Reserve is approaching monetary policy different. Britain is starting to discuss monetary policy in a very different way. And their previous techniques that they used to govern the way their currency was used and preserved, they're now using completely different techniques. So now you're getting central banks which they're rising interest rates for 5 or 6 months, and then next they're dropping them, and then they're raising them again, and then they're dropping them. They're being a lot more flexible with their decisions. And that's what we're seeing right now, is to these currencies like the CHF, the euro, and to the New Zealand dollar, which is also going to be influenced, but more specifically having a look at the CHF being a very, very influenced currency by currency trading. The CHF is the Swiss franc. It's a very, very powerful currency, but influenced very easily. So the reason why I was linking this back to central bank trading is these central banks are obviously moving monstrous amounts of money in different directions because of the fact that central banking policies are changing in such a fluid nature. So the general volume of trading is slowly but surely increasing over time between these major currencies that are constantly going through changes and movements with the central banks. So it's more common now to buy and sell monstrous amounts of currency over time, and a great deal of this currency transacting through overseas will go through the pound, will go through the euro, and then will go through currencies like the CHF being easily influenced. That's what we're trying to make use of, is what would be the easiest way to gain the full effect of this whole position when we're looking for an easily influenced currency. And the CHF for myself, for my personal preference, has worked very well over the last couple years. So the influence on this chart, you'll see that there is a lot of erratic volatility. But when we make use of something as simple as the Bollinger Bands, the stochastic, it can sometimes and often be definitely enough to spot an oversold or overbought currency. But going back to one of the statements I wanted to make is some of these trade opportunities won't be seen for a very long time. So we're now trading in where the Federal Reserve now is thinking of lowering interest rates. The British Central Bank is also thinking of completely changing their interest rate policies. We have influence from multiple different governments around the world on things like the Global Trade Summit, which recently took place. We also have global trade deals taking place between massive countries like USA and China. Even more extensively, things that are happening and taking place in Asia. So there is definitely a lot of mass events that were happening around the world the last couple of weeks, which have influenced these currencies to behave a certain way. But once again, when it comes down to step 3, execute, so discussing on this trade idea now, like I said to you, these currencies are very volatile. The CHF I do know to be a very volatile currency, which is why I've put it in this portfolio, and specifically trying to take advantage of this where the central banks are really starting to drive change in interest rate policy right now. So my main focus would be to have a look at the daily and 4-hourly timeframes to better understand exactly where the momentum of price is moving right now. So one thing I did notice, which I feel could be somewhat of an issue, is the downward momentum that's taking place on these charts. So I am noticing that there is very little breakaway from these downward trends that are taking place. As you can see, prior, we did have breakouts occurring. So we did have the market being very strongly suppressed and then a very strong breakout occurring. Now, when will that occur? We can't exactly decide on that, but what I can say is when you go down and you have a look at something like the stochastic, you are dealing with an opportunity where the market is very oversold. It's currently into the Bollinger Band level, and you do have that opportunity for the market to recover back to those points. In terms of the weekly time frame, what I'm basically having a look at is if I want to open up a position. So going on to the step 3 of execute, if I want to open up a position, where am I going to open it? Well, my focus is to know that there is an entire week of trading that I could have. Given the fact that the average past week of trading expanded by a certain number of pips, I can then actually calculate that. So I can calculate from the previous high down to the low, and I can calculate that it was 425 pips roughly over 8 periods. So by using a calculator, I can work out that each of those candles moved by roughly 53 pips. So by just using a simple box, I can then measure how many. So the average size of that candle was 53 pips. So what that allows me to do is understand that the average opportunity of window that I have to decide on if I want to execute this trade is that much. Because if the previous week has just opened, I can basically put that directly in the middle. So I can say that that is how much of a window I have to decide, because the previous couple candles average 53 pips, and the size of this box is, here we go, 53 pips. So you have the box that's the size of the average candle price could travel. Now, if I want to add to this position, I want to try and add to this position somewhere before it reaches the top of that box, and obviously somewhere, if I need to, toward the bottom of that box. Now, the previous candle moved down towards the bottom of the box and then came all the way back up to close in the middle. So there is a possibility this candle, this weekly candle, could pull down slightly, allow me to add to the position, and then pop straight back up. But I'm not going to rely on that. So what I'm basically going to wait on is this week to see if possibly on the smaller time frames there is some kind of setup that I can watch very closely. One thing I will be watching for is if the market sets up some kind of resistance level and then basically tests the level and then breaks out, then I will add to that position. But for now, I just have this room available inside this candlestick to decide on when I want to execute a trade. So I've at least taken the step 3 decision of saying, yes, I will execute a trade on the Euro CHF, but I will need to decide on when. So given the fact that these trades are spaced out very closely together, what I'd be able to do is just use a simple setup to space these, so at least I know that we're roughly, the very top trade is the same distance away from the bottom trade as the bottom trade is from this box. So if this gets to the very, very top of this box and we open a trade, then we're going to have 3 trades that are almost perfectly distanced from each other. But obviously for myself, I'd like to try and get to adding to this position as close to the middle as I possibly could, or even if the market drops down slightly, I'll add it slightly lower. So what I'll wait on for now is over the next 8 to 16 hours. So I'm going to watch the next 3 to 4 candles. If this market breaks up towards the upside first, then I'm probably going to add higher up. But if it breaks down first, then I'm going to add further down. But that all decides on how quickly it breaks down or how quickly it pushes up. So that is plan on step 3 executed for the Euro CHF. So on to the last instrument I have available. The New Zealand dollar CHF, I'm not going to do anything to, because there's no reason to. The market has moved into our buy zone quite well. We've made some good profit on this trade so far. There's really no issue with the trade idea. There's obviously the slight bear candle spinning top that we've had, which caused a little bit of an issue, but we're just waiting for it to continue progressing. If it moves to the mid Bollinger Band level, we might consider closing the position. But for now, it is working, and I'm definitely happy to keep on working with it. So basically, that does bring it to the end of, the step 1s, 2s, and 3s. Step 1 being trying to focus on having a look at exactly where these gaps are opening. If there is a gap opening, it's very, very important to jump on that gap as quickly as you can. If something does happen in the market gaps open, and you're not watching it very carefully, you can lose out. Number 2, making sure you're looking at the weekly opens. Where did the candlestick open? What did it look like compared to the previous weekly candle? And then step number 3 is, what is your plan to execute? When are you going to open up that trade? And what is your window of opportunity? So every single week you have 5 days to decide on when you're going to open up that trade and where. And if you don't have a good plan set forth, you're not going to win. The strategies that I'm showing to you are very simple and straightforward. They're not incredibly difficult to understand and replicate, but they can sometimes be tricky to get the trading mind to appreciate the importance of them. Sometimes you can sort of get a bit lazy and not follow the strategy as closely, but hopefully making use of these videos and showing you that I use the strategies the exact same way I teach them gives you enough belief in the system to realize that however simple the strategy, it does work and it will play out in your favor, so long as you follow the strategy correctly. So I do hope that this has given you a great deal of insight. Definitely by the next week, we'll be back to full presentations. I'm really looking forward to getting a full lecture presentation out to all of you, having both hands fully functional. But I hope you enjoyed this presentation, this lecture, and I'll make sure to see you in the next one. Cheers for now, everyone.